Welcome back to Tip TV Finance. We're here with the TradingView Show. I'm joined by Alessio Rustani from leadingtrader.com and by a man who's already made quite a name for himself in the industry, the Regional Development Manager at TradingView, David Bell. How are you today, David?
Not too bad, mate, yourself?
I'm okay, actually. It's a bit hot, though,
it's
but
roasting.
hopefully it won't last.
It's absolutely baking.
Yes, unfortunately the financial markets are not quite in the same heated state. It's been dull over the summer. Is it starting to pick up a bit now?
Yeah, I think volumes are picking up now. I mean, S&P obviously last Friday, we had a little fall off down
Woke
to
people
about,
up a bit?
Yeah, down to about 21.10 I think it was, 21.20. And I think they're going to continue falling. I think it's coming off today slightly. But it's really, really one to watch for, because if we get a break below 21.10, again, I think, going to keep going down to maybe 1992, something like that.
So we haven't had a sustained decline, nothing that lasted more than like a week in the last 2-3 years, I think. It's just been straight down and then straight up again.
Yeah, I mean, I saw a stat the other day. I think it was 127% of S&P rallies between 2002 and 2008 were due to earnings, whereas this time 92% is due to equity risk premium being eroded away. So there's no actual basis for these rallies to keep continuing at all.
Plunge protection team is what I call it. But let's have a look at some of the trading views that we got on tap today. Comes from Antoine, who's a friend. Well, he's not a friend of mine, but he's something I follow very closely myself on the small caps area, which I love. So, in fact, in this case, he's not actually looking at small caps, but looking at copper. But hopefully, we can learn from this as well.
Yeah, I mean, Antoine gives some really, really good ideas actually, and really defines his view really well. I think this is another really well-defined view. We've obviously got this kind of bottoming pattern. We've made higher lows consistently here since the beginning of 2016 on copper. The only thing that I see with copper though is the iron ore prices came off on Monday, and they could follow the copper prices. I think though, if you look at this technically, I think he's pretty right. If you get a squeeze there, you should see some follow through up to, is that 2.4? Yep. So I think he's pretty right there. What do you reckon, Alessio?
When we were discussing copper just earlier, and one of the things we were talking about is that copper used to be, we don't know if it still is, but it used to be a good indicator of the health of the economy. Mm-hmm. The famous phrase, Dr. Copper, that's what it was called. As far as the technicals are concerned, I like this chart. I like the fact that there's a very clean sort of setup. Probably a bounce off the triangle lows, that trend line at the bottom there. That's a bounce off that would be a good buying opportunity in my opinion. And let's see if we can move higher and break out of that. Except a move higher in the copper prices, that would probably, from a macro point of view, we'd have to think that the economy is probably improving, or that it's buying demand for copper.
Yeah.
Especially from China.
Yeah, I think Chinese data came out the other day though, and it was quite good in terms of productivity and construction as well. Surprising though that iron moved lower based off of that. I would have thought that iron would have moved higher, considering they use an absolute load of it. But yeah, I think the way that I would look at this is to see what happens around those resistance and support lines. See if a higher low is made. If it is, as you said, buy an opportunity.
I would also say this for folks who are watching, asking themselves, how do you trade copper, or how do you get in on this move? Copper futures can be very risky because of the pips. One pip move can. I'm not exactly sure exactly what the value is, but it could be quite risky. So another way to trade copper would be to trade the ETF for copper, which I believe is JJC is the symbol. I think it's copper ETF, JJC, so look into that.
Or obviously some retail brokers offer CFDs as well.
That's right, you can do a spread bet on it or a CFD on it.
There we go.
Okay, let's move along from copper and go on to gold.
Gold is really interesting for me on a slightly higher time frame. The reason being is that commercial hedgers are at an extreme net short position, while non-commercial speculators, so the large specs, they are extreme net long. Generally when that happens, you see a market turning point. The only thing with my view is that I'm bearish the dollar. So what does gold coming off mean for the dollar? It doesn't exactly fit with my view.
Unless dollar and gold maybe decouple.
Exactly. That's the other thing that I was going to mention, is that if the gold and dollar correlation, erodes away, we could see, a totally different market playing out.
Sticking on gold, I mean, I actually we established a small position with our own clients database on Leading Trader. We went long at 1310, just the previous bottom. But David, I mean, from your perspective, and I think from this gentleman who put this, I think it's a guy, tallest FX. What do you think? I mean, I would wait at least for a break of that 1300, which is a psychological support.
Yeah.
Would you agree with that? A break of 1300 would, or at least a close below 1300, because a break of it could be a false breakout.
Yeah, I mean, I think
then a move lower, presumably.
Yeah, but I think that area is very well heavily defended, just above 1300. Because if you see back in May, we had a touch massive rejection. Then mid-June, again, big rejection. And then sustained rejections of that level to the downside as well. I think it might face a little bit of trouble trying to break through that 1300 level. If it does, obviously, great selling opportunity though.
Okay, yeah, absolutely. Except one of the things about gold is one of the markets are very susceptible to false breakouts.
Yeah, I don't like gold. I personally don't really like gold that much. Yeah. But
all right, well, let's go on to the next market, which hopefully we'll like a little bit more.
Yeah, this is one that I've put up.
Looking at market profile there or volume profile?
That's volume profile there. Slightly different to market profile, obviously. Market profile would let you know the times that the prices move at, etc. But here I can see a move up to the value area high. If you look at the purple and the turquoise bars, that is the value area. That's where 70% of the market is traded within that time period. And generally what I find is when you reach value area high or low, the market rejects, because obviously trade can't be sustained at areas of lower volume. So it wants to stay within the value area and then auction out gradually. Sometimes you can get a massive follow through or a follow upwards, but generally that's what I'd be looking for. And also obviously Bayer have just acquired Monsanto. So, I can see some bullishness there. It's not totally complete, I don't think, but it's a $66 billion takeover, which is absolutely massive. If you look at it more
this is one of your own picks.
Yeah.
David. Okay.
If you look at it more technically from a candlestick perspective, you've got an engulfing daily, engulfing weekly, and it's basically a bullish harami. So, you could see a move up to there.
Okay, well, let's go on to the next contender. Kiwi US dollar.
I think someone labeled this wrong. It's NZD CAD, not NZD USD. Isn't that right? At the top says NZD USD.
It's Kiwi Canadian.
Okay, Kiwi. This person, Jamal White, who put this there, actually picked a market I've been looking at. I've been actually waiting for an opportunity to get long on this NZD CAD, mostly because New Zealand dollar has seen strength, but Canadian dollar has seen negative pressure, mostly because of the negativity in the stock market.
And oil as well.
And oil as well, exactly. All I got to say about this is I like this pattern, but I would wait for a close above 96.60. One of the things I found, I don't know about you, David, Zach, but a breakout from a multi-peak, we've got several peaks there, tends to be very prone to false breakouts. We've seen already a few times it's done that, but I'd wait at least for a close above 96.60 before I get long on the New Zealand dollar CAD.
Yeah, the thing that I really like about this is also, if you know anything about Wyckoff, that lower peak, you can see a perfect Wyckoff market structure there. So you get the up thrust or down thrust, you get spring down, which breaks that first initial move. It's basically a selling climax. And then you get the retest into that kind of distribution just above that lower peak. And obviously it comes down, retests it again.
The Wyckoff volume.
Yeah, volume spread analysis. If you go down to the daily at that point, there you can see a massive spike in high volume leading into that spring, and then it totally decreases in volume there. So that's also another good way to tell when the market's going to
Isn't there
turn.
like just the massive momentum of that formation that you've got the inverted head and shoulders type formation?
Exactly. Yeah, massive confidence there.
Hasn't it really already? You've got that flag there.
Yeah.
It's already done it. Really, it's not. You don't really need to wait for the breakout.
Well, there is a chance it could fail, and then you could see a plunge back to the range, the lower part of the range.
Yeah. Again, what I'd do on there is, with the standard head and shoulders theory, is to wait for the break, let it retest to the downside,
Exactly.
and then buy the retest.
Except when the dreaded thing happens, when you see a breakout and it never looks back and just says "see ya"
Oh yeah, exactly.
and moves away with
Oh,
that.
don't take the trade then.
Don't take the trade, exactly.
Exactly. That's the
Plenty
only
more
thing to
fish
do.
in the sea.
Exactly. I mean, well, if you're looking at a weekly time frame, you might have to wait a little bit longer, but
Yeah.
Always time. Okay,
That's
next.
it.
Got another one. Dollar yen short on there.
yeah, I took this trade myself. Again, volume profile, slightly different this time. You can see where the trade actually did this analysis. The green part wasn't there, the prices weren't showing the candlesticks. But what we had was a rejection into higher volume from relatively low volume. Market rejected down and then took it all the way down to the lower value area. And remember I said that the value area tends to reject when it auctions out into the 30% range of trading. Touch there, came back out. So that's just one aspect of TradingView that I really like to show. Also, if you're wondering, this is the IDC feed and not a single FX broker. So it takes, it is tick data, but it takes tick data from a load of different sources and aggregates it. So it's much more precise than just looking at your standard one broker
I
pricing.
haven't seen this type of analysis before. How do I learn more about it? Is there any way of doing that?
There is a document on TradingView. If you type in TradingView volume profile into Google, you'll find it there. But also, it's good to look at the actual market profile via CME, because that gives you a totally complete understanding of real market profile via exchange data, etc., and also how to trade it as well.
Yeah.
And that's the end of our selection today.
That is it.
That's it for TradingView this week. Thank you to David Bell, Regional Development Manager UK at TradingView, and to Alessia Rastani, my co-host from leadingtrader.com. We'll see you again next time.